Then the next stage of developments that after the new economic policy. Then after that, earlier that no merging or nothing was there. Then at present that for the last 2 to 3 years, so many programs the new government announced, and a total system of accounting system introduced in bank. That total accounting system, that NPA, a situation was there that NPA, non-performing accounts, because of the non-performing assets of the bank, those non-performing accounts are there. When a bank is performing, how a bank is performing? Regular income definitely should get, and regular, when they are charging regular interest, and they have to get back the regular interest together with the principal amount. The main function I already mentioned, that deposit from the customers and giving advances. That system I can explain that more. When the banks are getting license, they are getting license to collect deposit from the public. When we are mentioning the deposit, so many different types of deposits are there: savings bank and current account, and then after the term deposit. Savings banks means those accounts open for savings purpose. Current accounts means those accounts open for business purpose. And these are the two usual type of accounts opening in banks. Current account, that no interest or anything that bank need not give. Savings bank, that they have definitely that earlier that savings bank interest is common, at present it is different. But different bank is giving different rate of interest. That situation is there. This is the first option that that banks are getting income. They are getting source of money, source of fund. Then term deposits are also there. So much term deposit usually it can be minimum 15 days to 10 years. 10 years will be the maximum amount a person can deposit. Above that period also can deposit. In the case of corporates, other organizations, they can deposit. Minor accounts can also deposit. And anyway, they have to renew. That those who are depositing should renew after 10 years. That is the only thing. That anyway, that these are the sources of the banks for getting amount. These deposit, out of the total deposit, government is insisting, RBI is insisting a certain amount as reserve ratios. These reserve ratios should kept. The CRR and SLR, everything that we can mention when we are detailed classes taking based on RBI, that we can give everything. Then CRR, cash reserve ratio, statutory liquidity ratio, these two ratios they are keeping. After keeping these two, the remaining amount bank can lend to the public. Actually, these two statutorily they have to keep. That is, by the RBI instruction they should keep. After keeping all these things, from the total deposit they are collecting, the remaining amount they can lend to the public. That lending, so many restrictions and so many regulations already made by the government and RBI. There is priority sector advance. The very purpose of nationalization is providing finance to the public for the best sections, for the very important sections, for agriculture, industry, service, business mainly. This priority sector mainly include agriculture, industry, service, business. Then after priority sector, all the government schemes are including priority sector, and together with the housing is also including priority sector. Industry is also there. There are so many priority sectors. Based on the priority that government is giving more importance to the sector. Based on the priority that all the years that government is planning to certain target-oriented programs, they are announcing every year. Thereby, that bank has to give more advances to this development, to the upliftment of particular sections, for the development of particular sections. That is priority sector advance. Statutorily, 40% of the total advance should be given to priority sector advance. That is a rule already that government introduced, RBI introduced. 40% of the total advance should be for priority sector advance. From the remaining 80%, definitely they can give to other commercial activities, so many activities that based on the allowable rule of the RBI, they can give. And so many corporates, so many big finances, so many huge projects, government sponsored projects, private projects, And all the national and international corporates, everywhere they can invest and they can lend and they can give the remaining and they can make maximum profit. Individual banks are looking their profits separately, considering their profits separately. Then I already told that privatization, that after the Narasimhan Committee report that so many banks were privatized. Then after that, privatization means disinvestment. But already the government invested, 100% government of India owned banks were there, 16 and 80. That already told that 19 banks, 20 that only is merged and remaining 19 banks, they already had that 100% government share. Then after they disinvest those shares, after the new economic policy, they decided to disinvest these shares. Then minimum target they fixed, government for meeting the requirement of the public sector, more than 51% shares should be owned by government of India. That is public sector. In order to keep the public sector nature, that more than 51% shares should be kept by the government of India. Above that level, that they can, after 51%, they can sell to any level. That so many banks already sold, disinvested so much shares. And what the disinvestment amount comes to government of India, they can utilize this amount for infrastructure and other developmental activities of the government. So much policies they are announcing and they are utilizing for the infrastructure development, roads, railways, and so many sectors they are investing, harbors, and so many sectors they are investing. This is a role of the source of government that at present that those amount they can utilize for infrastructure development. Recently, the last budget that they announced that LIC of India, they can disinvestment certain percentage, 100% shares. Definitely government owned by government of India, they can utilize certain amount. After disinvesting those amount, they can utilize for other purpose. That way that the source of government fund are also, they are searching and they are finding every budget, they are allocating certain programs, they are deciding certain programs. All these are exactly really the financial sector development, This is exactly the banking system. Each bank is calculating their profit individually, that is branch wise, then after zonal wise, then after regional wise, then finally that the entire bank's profit they are announcing, and quarterly, half yearly, and third quarter, and finally that annual budget, their annual program they are announcing, their profit balance sheet they are also announcing. Then from that balance sheet that everybody is getting a clarity regarding how the bank is functioning. And NPA, certain restrictions are also there. The restrictions that the NPA should be least. And for the strengthening the health of the bank, a capital adequacy ratio, CAR ratio, government introduced. That are also very important for meeting the health of the bank. All these are very detailed class we will take, and for getting the basic idea, we are giving all these things. Okay, thank you.